you know that I've been bearish virtually all year. I have believed stocks have been very expensive, and it's been a long time that I've believed this. So today, when we got JP Morgan reporting earnings, a stock that I know is relatively cheap, I had to give it a good look. And a good look I did give it. And walking away from this, it gave me even more clarity around the idea that I think a lot of stocks are very expensive, particularly the biggest stocks in the market. Apple, Google, etc. Maybe at early stages, these companies, obviously, were going to deliver very big, consistent growth. But just like the oil companies used to be the biggest companies in the world, I now think the Apple and Googles, being the biggest companies in the world, are that. They're basically commodity-type companies with commodity-type products, very big, very global, and of course they'll grow, but so will JP Morgan. JP Morgan will certainly grow, and it'll grow with the international economy. However, right now, there's, all stocks have the same thing. They have the same financials. You'll look at the financial statements. That's what you're getting. That's what matters to you as an investor. Not some pipe dream, but what they're actually able to put down on the paper, on those financial statements. That's what matters. You can obviously project future financial statements, but what matters is this idea, unless you're investing for political reasons, which I'm not going to judge you for, but we're here to make money on this channel. Even though I'll have my fair share of politics, I'll indulge myself every now and then. Anyways, back to this. JP Morgan has a higher net margin than both Apple and Google. JP Morgan has put up 3 consecutive quarters above 30% net margin. Let's look at Apple over the last 3, 25%, 25%, and 22.99%. Google, 21%, 17%, 20%. Google's net income in Q1 of this year, $15 billion. JP Morgan, let's look at a couple other things too. Google's net income in Q1 of this year, $15 billion, down 8% year on year. JP Morgan in Q1 of this year, not Q2, which they just reported. It's even higher than this in Q1. I'm coincidentally using the Google financials page, which is unfortunately not updated for JP Morgan at the most recent quarter, so keep that in mind with what I just said. But $12 billion in Q1 of this year. They're very much in the same bracket. However, that number was up 52%. Let's not forget, interest rates last year, particularly on the longer end of the curve, but also obviously on the shorter end of the curve, for these banks, it matters more on the longer end of the curve. There's only so many 6-month loans that these guys are making. They're doing longer-term loans. 52% net income growth. And this is more the normal level that this bank is likely to be at. This $12 billion number. Not the numbers from COVID when interest rates were incredibly low, but these higher numbers where interest rates are more normal. The 10-year, maybe it's slightly higher than where it will be in 5-6 years from now. Maybe if there is a very easy environment outside of this, which I don't think will be the case. I think the Fed will avoid buying securities for years, possibly at least a decade, barring a massive recession in which I don't think they will even drop interest rates to zero again. That's what a few of them have said. And many of them have said they want to get away from things like residential mortgages and not go back. So I think there's like an actual structural change to the way stocks and the economy, stocks are going to be priced, the economy is going to work from a liquidity and funding perspective to some extent. I'm not saying it's going to be, we're going from heaven to hell, but it's going to be different. It's going to be, not as easy. Not as easy. And that probably is a good thing in terms of inventiveness. So, with that in mind, with that just thing in mind, I want to keep in mind that Apple's both revenue and net income numbers are down, but the stock, even though it's bought back stock, which in theory can exist, I'm not saying they're going to sell stock and put that in here. I'm just saying that the soil of the stock market is different, with no longer a TINA trade, interest rates that actually offer a return, a smaller money supply, and Apple is at the same market cap, $3 trillion, that it held for about 1 day in January 2022, despite shrinking the business from what was an all-time stay-at-home boom. And near record high multiple, at least certainly near record high multiple for the past couple decades. I mean, I'm just trying to put things in perspective and look at this. So I look at a company like Apple, I won't touch. You know that. I've said that. And I look at a company like JP this is the new Apple. This is like the Apple it was at its cheapest in the last decade plus. This is, when Apple was at a 14 multiple, JP Morgan's now at an 11 multiple. That's what Google's saying. I don't know if that's updated. Trailing. I think JP Morgan earnings, they still have potential to go up. I think, last month, interest rates were relatively low. They had high legal expenses. They had, onboarding of FRC expenses. I expect that in the next quarter, the 10-year is going to be higher. This quarter is going to be higher than it was last quarter. When SVB happened, there was a lot of fear. People kept thinking the Fed was done. They won't have those legal expenses and earnings to go even higher. And then can't really see with more clarity beyond that. But what I feel and can sense based on where the 10-year is relative to historical levels, even with the Fed funds rate typically being lower in the last several years or so, I expect the earnings not to come back down as the Fed cuts rates, but to rather plateau at a much higher level, which is what happened through COVID when interest rates went down. There are a number of reasons for that. I don't know the exact numbers offhand, but my assumption is with all the government stimulus and the quantitative easing, their deposit base grew. JP Morgan was the only bank whose deposit base grew so far that's reported in the last quarter without FRC. With FRC, grew even more. They use the term bargain for FRC. Seems to be the case. I mean, they beat the numbers without FRC, beat the numbers dramatically with FRC. JP Morgan's a new Apple. That is my opinion on this stock. And in a market that's very expensive and there are very few stocks to buy, this is one I like. And this is one I actually can buy. So, yes, I think a lot of stocks are very expensive and I don't want to touch them. I'm going to refrain potentially permanently from saying we should short. But this is the kind of analysis and work I'm doing about a business that is making me excited to buy a piece of it and feel like I'm getting a good deal and making a good investment. Many others, when I look at something like this, JP Morgan is a third of the price of Apple. Apple's not growing. JP Morgan is. I like this stock. That's my thinking. I'm applying that to the broader market. That's why I like energy. I think energy, it's a good time to buy, even on days like today where it's pulling back. Especially on days like today where it's pulling back. You look at Russian oil, sanctioned Russian oil. 2 days ago, traded above the G7 price cap for the first time. Think about that. The price of oil has been higher just a few months ago, and it wasn't trading above the G7 price cap. Now it is. That should tell you something. Don't worry about one day. Be patient. See what happens. Collect the dividend. That's today's video, and until next time, peace out.